Hello, everyone. My name is Jacquelyn. I'm a correspondent at the Business Times. That's a financial daily in Singapore. And I write about startups, technology, as well as innovation. So thanks for coming to this panel discussion. This is titled Digital Transformation in Finance. And I have with me here four very interesting panelists, who I will introduce to you in a bit. But just to give you a bit of some context, this year, the year is 2018. Most of us have heard of and are probably familiar with the concept of digital transformation. One definition of that is the radical rethinking of how an organization uses technology to create new net revenue streams or business models. And in finance, many banks have, by and large, already transformed and positioned themselves as digital-driven platforms. And at the same time, new financial tech startups, or fintechs, have continued to emerge, either disrupting or collaborating with banks. So we have here four panelists today who will discuss digital transformation in finance, and I will introduce them to you. Right next to me is Gerald Mackenzie. He is the head of innovation, business transformation at Credit Suisse. Next to him is Xinxi Wang. He's the director of Litecoin Foundation. That's a non-profit organization whose mission is to advance Litecoin. And then we have Milind Sanghvi. He's the head of digital payments at OCBC. And finally, we have Stuart. He's the director of financial services at Salesforce. So let's get right into it. So guys, digital transformation in finance is not new anymore. What are some new drivers or compelling events that are accelerating digital transformation in finance? Anyone's welcome to take this question. Gerald?
Okay, I'll start. So I think, the way that we're now thinking about transformation within Credit Suisse, or at least how I think about it within Credit Suisse, is transformation. We used to think about it as an event that had a start and middle and an end, and you got it over and done with, and then things kind of went back to normal. It's no longer the case, right? I think we're constantly having to rethink and reinvent our business model. The one constant is clients, and understanding, where your client sits, what their what's critical to them in terms of how you serve them is the one stable core of your business. I think increasingly in banks, as we see banks open up and the industry and the value chain start to break apart, you'll see different parties playing different roles within that value chain. How banks become present in their clients' ecosystem and go to their clients rather than expecting their clients come to them is going to become really important. So how we bring our services to ecosystems of clients is critical, and how we remain relevant to those ecosystems of clients.
Maybe Milind, you want to elaborate from OCBC's point of view?
Sure. I think you're spot on, right? The barriers are all dropping, and they're dropping really, really fast. And I think one of the most interesting parts of the transformation is that they're dropping faster than they were even before. So incrementality is all about kind of just keeping on chucking away at it. I think what's interesting from a bank perspective, and having been in payments for a lot longer than I want to admit, the specifics is the next player that's going to come is going to grow faster than the player before that. And I think as banks, we've got to constantly challenge ourselves on, hey, where are we? Who do we partner with? Kind of what do we build ourselves versus where do we partner? And I think that makes a huge difference. And I think that also challenges you from a talent perspective on who you bring on board. Also challenges you from the old 3-year project or finance planning perspective as well. But yeah, I mean, the barriers are coming down. We got to keep moving, and we got to move faster than everybody else. And partnership's probably one of those best ways out there.
Yeah, that's great. So that's the point of view from two banks. How about we hear from Stuart?
Yeah, thank you. I think customers that are coming to Salesforce are often challenged by, a lack of agility. They sort of enter into a technology arrangement, and immediately the version's getting old, and it's very difficult to come to update. I think if I think about compelling events, though, that the two most impactful at the moment, sadly, compliance is probably the leading one. Where you look in the Australian press, for example, now, and its Royal Commission's been discussed all day long, and firms are like losing huge market cap for doing the wrong things by their customers. So the political angle, the societal angle and expectations on banks is changing such that customers really do need to be at the centre now. It's been kind of just verbiage before, but customers are actually needing to change. The other fundamental change is around open data and open banking. We've seen PSD2 come out in the UK and in Australia, and Maz making comments towards open banking. This is fundamentally changing the way banks connect with their customers and allow customers themselves to take more control in their banking destiny.
Right. So now we have Xinxi to share with us from his point of view, because he deals with cryptocurrency. So that will be quite interesting to know how this fits into the whole digital transformation in finance picture.
I think cryptocurrencies is going to play a very big role in the future in the finance sector. So when I was buying songs on iTunes, Apple doesn't charge my credit card immediately. Instead, they wait for a few days to see whether I'm going to buy more songs. And if I buy more songs, then they will batch all the transactions together into one transaction. They do this because they want to save the cost of charging my credit card. And if they don't do that, it's going to be too expensive. So I see this is a very big hurdle in the traditional finance sector, and I think cryptocurrencies is going to reduce the cost of transactions very, very dramatically. I guess all of you have heard about Bitcoin or Litecoin, and I think actually there's a very interesting software called Lightning Network is happening. It's going to reduce the transaction cost to nearly zero, and you can do sub-cent transactions, a fraction of a cent, so with almost no cost, and it's going to be instant. So when you send some money to another guy, it's going to be confirmed within a second. And I think this is going to change the payment industry dramatically. Thank you.
I'm going to have to ask Milind and maybe Gerald this. How are banks dealing with cryptocurrency? What is the view of cryptocurrency?
Yeah, at the moment, it's a big question, obviously. I mean, obviously it has the impact or it has the potential to completely transform the way that we do business when you think about distributed ledger technology. In terms of the actual sort of process of launching cryptocurrencies, the ICO process, etc., it's not something we're participating in at the moment because, from a risk perspective and talking a little bit about the kind of compliance issues that Paul referred to, it's just not something that we feel that we can support at the moment. But we do see the potential for it to have a massive impact on the industry.
Stuart and Milind, how about at Salesforce and OCBC?
Yeah, look, I think crypto is coming, right? If it wasn't already here, it's coming for sure. There's no doubt about it. What version it comes in, I think DLT is one of those things that is genuinely a game changer. I think nobody, even if you're not from the industry, you still agree that DLT is kind of serious and can change the game. I think on the currency piece, there's a few things that need to come around a little bit more. I always think of, especially when you think of payments, both sides of the network have to come together, which is the acceptance and the people holding the currency and the acceptance side. And I think the acceptance side is still being built. And I think once that comes around, I think there will be a pretty serious shift in that. I think from a bank perspective, we're doing some things around it, especially on DLT, or at least discussing it. But a lot of it is about what's coming next and how do we kind of meet the customer needs to drop the costs for a customer, whether it's a merchant or a consumer. And I think that's really where a lot of our thought processes are.
What we've seen is that for cryptocurrencies to really take off and be impactful in society, I think we've got to see more stability in the price. If you're going to buy coffee one day and it's $4 and then the next day it's $32, people aren't going to transact in it. As far as banks' adoption of it, we've seen some developments recently in that having derivative markets, having the ability for institutional traders to be involved and hedge the risk because, as I said, it's quite volatile. I had the fortune last year of interviewing Coin, who have built a cryptocurrency exchange based on Salesforce's Heroku platform. And that stood up and gave stability during the recent crash of the cryptocurrency. And I think people really want to see that they're going to be able to enter and exit from cryptocurrencies back to fiat currencies in order for that to really take off.
Okay, Xinxi, I'm going to give you 10 seconds to defend cryptocurrency.
Okay, so I think they have raised a very good questions about cryptocurrencies. So the first one is the usability of cryptocurrencies. So right now I see most people just buy cryptocurrencies to speculate on the price to make profits instead of using it to buy things. Yeah, that's true. But I also see a lot of more people are using the cryptocurrencies to buy things on the internet, either legal ones or illegal ones. But yeah, but another question is the volatility issue. Yeah, that's right. Bitcoin's price rose quite a lot during the last few years, thousands of times, which is pretty good, I think. But it's not good for a payment tool because the price should be very stable. Otherwise, you pay 1 Bitcoin to buy something. Then tomorrow you will regret it because you can buy that using 0.5 Bitcoin. That's a very big problem. But if you look at the volatility of Bitcoin price in the past few years, you will see the volatility actually decreases quite a lot. I think this is because more and more people know about Bitcoin. They own Bitcoin. The more people participate, the more stable the price will be. So I think in the future, the price will be even more stable. And regarding the usability issue, yes, we are working on that. We are going to make it more easier to understand, easier to use. We are developing all kinds of apps, education materials, and I think that's not really a problem.
All right, so I think we look forward to a future where cryptocurrency would feature maybe more in traditional banking. Moving on, and on a similar topic, in the last few years, we have seen fintechs and the more mature financial services firm starting to work together. What has your own experience been like, and can you share some learning points for both parties? Maybe Milind?
Yeah, thanks. I think from a bank perspective, we must partner, right? And the question comes down to where and what kind of specific stuff do you partner in and what do you build? Having been at the fintech side in my past life pitching to banks, historically the blocker always comes on the compliance or risk side in terms of the stability of that fintech and how long they last and their funding and a few other things. But I think there are very specific points that fintechs bring to the game and advantages, but there are very strong advantages to the brand that a bank brings and the regulatory compliance and the systemic stuff. I know a lot of fintechs look at the systems as kind of slow moving, but there are advantages to it in terms of stability. And I think that's really where that balance has to come about, where you partner and where you build. There are advantages on both sides. We've got to figure out exactly how to leverage each of those advantages.
Gerald?
Yeah, we've had quite some experience, and personally, I've aged 10 years over the last 5 years, working through some of the implementations of fintech partnerships that we've done. For instance, we're partnering with a firm called Canopy here in Singapore to do account aggregation, so we can offer our ultra high net worth clients a holistic view of their custodial relationships. Now, I mean, my job was to make that as simple as possible for our partnership process with them. But given our sort of legacy and given our usual approach to partnering with much larger firms, we made it a very painful process. And so it really helped that the partner we had chosen also knew what it meant to partner with a bank, and so they were kind of prepared for that implementation challenge. And I think having been through that challenge once, we're now in a much better position to be much more agile, much more responsive in the future deals that we do.
Stuart, do you have any learning points for either fintech or banks?
Yeah, I was having a conversation probably 3 years ago with my colleagues, and fintech wasn't even really a thing. Like, it wasn't well understood, and when it came out that, there was a famous quote from Jamie Dimon, the Silicon Valley's coming, and it was seen as this threat to the industry at large. But I think what the industry's come to realise is that fintech has a scaling problem. It requires the mass customers that banks deliver, and banks largely have an agility challenge that fintechs deliver. So there's this symbiosis between the two groups that plays out in things like innovation labs and the venture arms of banks, where the innovation labs might have like a 1 to 18 month, 1 year to 18 month view, and then venture labs goes further to look for making complementary investments in fintech. So very much going from enemy to frenemy to vital. So whether you use partnership or whether it's like a vendor relationship, they too need one another.
Xinxi, any of your own experience that you want to share? Regarding working with traditional financial services firms?
Traditional financial services?
Yeah, like banks or...
I think if you look at the underlying technology of Bitcoin and Litecoin, it's blockchain. And I think blockchain is a very good infrastructure for banks to work together to accelerate things. Yeah, but I don't really know how they do that because I'm not in the bank industry. But I think I've heard of a lot of stories about this, and I think maybe this could be something interesting.
So on that point, and this has been a topic that has been talked to death, does legacy continue to be the biggest internal barrier to innovation in banks, and how can banks overcome this? Gerald?
I think that, legacy has to be understood because the richness that we build as brands and the value that we create our clients all comes from legacy. And so as a sort of innovation lead, if you come to your colleagues within a bank and sort of say, okay, we're going to break everything apart and change everything we do, then you tend to get a relatively frosty response, right? I think what you need to be able to respect what has been created and protect the value and the legacy before you can move forward. So one of the interesting things that we're looking at, for instance, at the moment, is how we pair our advisors and our human intelligence within the firm with artificial intelligence from outside the firm, so that we're making groups of people better in the way they make decisions rather than trying to replace people with predictive or decision-making intelligence. And I think that helps build a bridge between the legacy and the future and allows for people to sort of get on board with this digital transformation, right? So I think we need to look for ways of building bridges rather than trying to take these great leaps forward.
So Milind, do you agree that legacy first has to be understood before they can be changed?
Yeah, I mean, I think legacy is also a very interesting word, right? Because legacy, in some instances, means has a rich power to it, right? Even in normal culture, and then in some cases, a la fintech potentially, right? Legacy is looked at as something bad, but again, it comes down to finding a blend. I think a lot of the legacy problems comes down to talent and talent innovating itself and talent pushing itself to get out there and learn new things and new ways of thinking, right? And I think that's really where the power comes in of the legacy, which is you have the ability to push stuff along. You look at our brand like Frank, right? They're constantly changing the game in terms of who they partner with, what we bring to market. But it's also about us sitting and learning more about millennials and what they're doing out there and how they want to transact and what their needs are. And the same thing on the silver side. So I think legacy is strengths and weaknesses, but a lot of it comes down to how fast your talent can adapt out there.
Stuart, any thoughts on legacy?
Yeah, so when I first heard you say legacy, I immediately went to technology, legacy platforms. But in fact, what we find is that it's cultural legacy that is the biggest challenge. It's no coincidence that bank executives are more often ex-Google executives or maybe worked at Walt Disney. which 25 years ago you'd think that the board was mad. But banks are coming to the realization that access to capital is no longer their exclusive right. You can get that now from fintechs or lending platforms. In fact, they're service businesses. You don't hear institutional banks arguing about who owns the customer anymore, because the banking industry is turned into like a modern restaurant where you can see the food being cooked. You want to show the customer where they are in the onboarding journey. You want to show the customer their collateral position. And you need technology that actually opens the bank so that you divert calls to your call center, actually give customers a better experience.
It's interesting. Xinxi, do you have anything to add?
Yeah, I think cryptocurrencies need the traditional banking industry to be successful. Actually, I own a crypto exchange called coin.com, and we have a bank account from OCBC, and it's very important for us to keep the bank accounts open so that users can buy cryptocurrencies by depositing money to OCBC bank accounts. Without that, our business is not going to work, and it's going to slow down the adoption of cryptocurrencies very seriously. Also, I think banks are a very good way to attract customers. So actually, Litecoin Foundation is going to acquire a bank in Germany. And I think this bank interface is going to make the user acquisition part much easier, much more legitimate, and it's going to be much more convenient to advertise as well.
I think that's a very interesting point. A lot of us, when we think about the word legacy, we just think old ways of doing things, being slow, being a dinosaur, but we forget that it comes with a lot with the bank's reputation, branding, users. And so that actually leads me to my next question, which I will ask before we move on to questions posed by the audience. And that is, how has the role of a bank changed? What should a bank look like in 5 years? And what roles do fintechs play? Stuart?
So that's a small one. Yeah, I think I borrow from DBS's current slogan, which is live more, bank less. And in the future, banking will be, I believe, ubiquitous. It'll be about living, and banks will facilitate experiences rather than you actually going to a bank or going to your app. It'll just be sort of within your apps. You know, Uber, Grab, these all make this famous where you just leave the cab, you don't care, you assume that the transaction will take place. And fintechs have a huge role in that, obviously, because fintechs probably what banks were when they first started. They had a very, very known purpose and solving a very unique value proposition. And I think banks, you know, because they're often solving so many problems, they sometimes lack the focus that fintechs can bring, which is why those partnerships exist. 5 years' time, who knows? I know they'll be regulated, and I know they'll be challenged to be even more customer-centric, that's for sure.
Gerald?
So I think in 5 years, you know, things are going to change a lot, right? But I come back to the core point I started with, which is, you know, understand your clients and understand the people who are going to be your clients in 5 and 10 years' time. And as we look at sort of the millennial next generation of clients who are coming through, what we see is three big kind of factors, right? One is that they're much more willing to switch business around banking relationships. There's probably not the same level of loyalty, right? The second is that they want the people they do business with, including their banks, to reflect their values. And so we need to be in alignment between the values that you represent and the values that your clients represent. And thirdly, they want to be part of a community, and they want to engage with members of their community and have many-to-many discussions, not one-to-one discussions. And I think banks have got a lot of work to do to, you know, learn to adapt to all three of those different mindsets that we see of a new generation of clients.
Milind, do you agree?
Yeah, I mean, there's a pretty wide spread of viewpoints there. I think the main thing that when we talk about change, right? If you go back maybe 10, maybe 15 years, banks did one thing. They gave you a checking account, they gave you a saving account, maybe they gave you a credit card. And I think now the expectations of customers from their bank is a lot higher in terms of what needs they need to be met. They're also expecting banks to a certain extent. We have to play this like very interesting line of being invisible yet secure and still promising a brand, right? So across all three, how as a bank do we continue delivering that? And that's why, I think we've all talked about partnerships, whether it's the fintechs or whatever it is. That's why we've got to be super careful in terms of how and who we partner with and what amount of data moves back and forth. We talked a little bit more about data concerns. So I think the banking definition of banking is genuinely changing. I think the expectations of the bank is also morphing pretty seriously. But I think there's also a genuine partnership that can happen between the fintechs and the banks to deliver a deeper value proposition for all our customers out there.
Xinxi?
I don't work for banks, so I can only give some of my own opinions. For example, I think it could be good for banks to accept cryptocurrencies, like foreign currencies. You can provide a savings account or check account. I think that could get some cryptocurrency users as well.
And how about the role of fintechs?
I don't know much about it because I don't work for banks.
Okay, should they be, I guess cryptocurrency can be a form of fintech. Should they be disruptive? Should they be collaborative?
Yeah, there will be a lot of collaboration, I think. So I think cryptocurrencies cannot succeed alone. It has to partner with traditional banks. And I do see a lot of collaborations. Except the savings accounts, maybe you guys can provide some kind of credit card for cryptocurrencies. So when people use the Visa card to buy some things, you deduct the cryptocurrencies from their account.
Right. So that was a plug for cryptocurrency. Let's move on to questions posed by the audience. There are a few, but I would like to take the simplest one. That's also the shortest one, second shortest one, and that is, what is the use of physical space for banks in the future, if any? Well, I guess the bank folks will have to answer this first. Milind or Gerald?
Sure, I'll go first. I think that was plugged by somebody asking me to answer that for sure. Look, I think there is a need for physical space in some format. That's what our customers are telling us right now. I think the definition of a bank and the experience that you expect in a physical branch is genuinely changing. Again, I go back to the way we build banks or physical spaces differs based on the customer segment that we want to go after. It also differs on what products work in that segment. Frank is a great example of an OCBC branch where the experience is very different from any other bank you've ever been to. And that's something we're constantly questioning, right? It's not just about the physical space. It's about what's the expectancy when a customer walks into that physical space and what services they want delivered in there.
Gerald?
So as a private bank and an investment bank, we have a different business model, and therefore we don't have the same type of branch network. But having said that, in our case, clients still want to come to a physical space. Either we go to them or they come to us. They like coming to us. The reason they like coming to us is because our clients tend to have very complex arrangements in their lives, right? So they have their own personal wealth, they have family networks, they have business networks. At the moment, we don't have an artificial intelligence that can really understand those complexities. So the role of the advisor and the role of the human in combination with technology is still critical. And being able to sit across a table from someone and see how they react to questions and to have that emotional connection is still really important.
Stuart?
Would you believe now in Australia there are cashless banks? It's like having a pub with no beer, right? But banks are, the walls, the screens, the dividers are coming out of banks and they're actually turning them into experience centres where it's not profitable to someone to go and make a withdrawal or make an inquiry, that you'll be redirected to an app or a call centre. Bankers want you to come in and by having that incidental conversation, they're looking to understand more of your needs, because via mobile apps, via call centres, it's very difficult to understand, even with the data analytics available, that you might be planning a holiday or that you might be planning to have a child. But when you're having a real discussion with a human, these questions come up and there's a genuine bond and connection that's difficult to replace. So branches are becoming these centres where you can move people into higher value propositions around wealth management, around insurance, but not transactions. The cashless bank's a key example of that.
So it seems that physical space is still needed for the experience factor. Let's move on to another question posed by the audience, and that is, do you expect consolidation in the banking players or matured fintech startup in the next future to compete with fintech giants like Ant Financial? I guess the question is asking, do we foresee consolidation in the banking sector, and will Ant Financial be a rival or a competitor to banks? Gerald?
I think companies like Ant and other big platform players are going to play an increasing role in banking as opposed to bank. And I think how banks work with some of these large platforms is going to define in some ways how successful they are. I think fintechs also are going to become much more central to the way we operate. And it'll be interesting to see how fintechs that don't have the backing of big platform organizations like Ant are going to scale, I think, to Stuart's point earlier.
Stuart?
What's interesting about Ant Financial is it's almost like built its own ecosystem. It's had the messaging, it's had the payments, and it's the Chinese marketplace has addressed it in a very different way to any other market, because in other areas you're kind of piecing together fintechs with individual banks, and I think it's more difficult to reach that critical platform that Ant's achieved very successfully. Will there be consolidation? I think what we haven't seen since the rise of fintech is a serious market downturn to test some of these fintechs. We've got alternative lenders using Facebook data and really what would you consider odd ways of making credit decisions, but it's untested. We haven't seen a downturn where you're going to see defaults rise and maybe that consolidation could take place then.
Milind?
Yeah, I think consolidation is also a very interesting choice of words, right? So will banks start partnering more to fight off some of this stuff? You look at R3 as a great example where global banks are coming together to create clearinghouses of maybe crypto of some format or the other. I think also the definition of a bank is being changed by these alt guys coming in, right? Whether that's an Ant, that's a WeChat. You look at Ant's money market fund is probably one of the larger funds out there globally. You look at Grab, what they're doing on financial services. So I think it's going to come down to where and how the customer defines a bank and what they want to do with it. And I think there is opportunity for banks to come together, but there's also coming together could mean coming together with an alt lender as an example and saying, look, we'll give you a deeper suite of services. So it's not just about, three guys coming together necessarily. It's about how we start approaching the needs of a customer very specifically.
Interesting. So more collaboration expected. We have 1 minute, and I'd like to ask the last question for this panel, and that is a cryptocurrency question, just to end it off. Can cryptocurrency replace money issued by central banks? And I guess that would be the parting thought by each of these panelists.
That's a very interesting question. Yes, so I think cryptocurrencies are solving some problems of the money is issued by central banks already. For example, the hyperinflation issue. Bitcoin was designed to be deflating, so the Bitcoin just cannot be created for free, banks can print money without much cost, but Bitcoin cannot do that. So that's a very big advantage for Bitcoin. And I see another issue could be that central banks using credit, they are running based on the fractional reserve basis. But a lot of people criticize that banks should run on a full reserve basis. And I think if they adopt cryptocurrencies, all of them will convert to a full reserve banks, and I think that could solve a lot of credit crisis things.
Okay, Gerald, very quickly, can cryptocurrency replace money?
Good question. I think crypto can become a primary form of currency, but whether it replaces fiat, I think, is too early to tell.
Milind?
It's about what's the stability, right, of whatever that monetary instrument is, and crypto is not there yet, right? So I think once you have the stability, once you have the acceptance, and once you have the awareness of not just being an investment product, right, but a use product that can actually, I can settle funds, I can keep it in somewhere, and it's relatively stable. I think there is a potential that it comes along. That's going to take some regulations. There's a few questions over there, but I think there is an opportunity, but stuff like this has come in the past and gone away. The story is bigger than ICOs. It's much more about long-term sustainability.
Okay, Stuart.
I think the answer is no.
Okay. All right. Thank you very much, panelists. I hope you enjoyed this session, ladies and gentlemen.